Futures positive as markets prepare to head into a two-day Fed meeting. Indices are now at post-election highs. Stocks in Europe gain ground, recovering from news of Mario Monti's surprise resignation and bolstered by data showing rising German investor confidence. I'm Brittany Umar, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with TheStreet, and together we bring you Morning Call. So today does kick off a two-day Fed meeting. Scott, how do you think the market is holding up heading into it?
I think we've been inching higher. The market's had a really nice move from that November low. It was compelling then. But as we come into where we are here around 1420, it's slowed down. The I would say stock selection or the participation from every stock out there just isn't taking place. So you have to be very specific, and it does feel like there's a bid in the market and we could head higher. Just I don't think traders think there's that much meat on the bone, and it does lack a lot of momentum.
What levels are you watching in the S&P right now?
Well, as we inch higher, you just want to maintain that we can continue in that methodical approach. So if you go to the chart of the S&P, you'll see right here, after this break of, remember this trend line that we talked about from the June 4th lows, that was a good spot to take some risk off. From there, methodical move down from 1440 all the way down to here about 1343. From this spot, you had a quick move. Remember through Thanksgiving, nice quick move, lots of participation, lots of things oversold. Then we actually got overbought right around here. Remember this outside day? That was right around here on I think, what was it, December 3rd? And it led to nothing. It led to a little three-day pull-in. We worked off the overbought condition. And now we're just like hovering in this pennant type pattern here. Perhaps maybe after the Fed, it gets going. If we break above 1423 and we get a nice wide range bar up to the 1434 or 1440 area. But overall, I think we're acting well. There's a bid to the market. There are things to do. They're just not blaring A setups across the board. And traders like A setups. So when there's only B's and C's hanging around, you just have to be a little less size and just not do as much.
Well, as you mentioned, there are stocks out there that are potentially setting up. Let's talk about some of those right now. Facebook has been acting well, but we're seeing some consolidation. So when do you think we might see another breakout?
Well, traders are trying to figure out if that last move from just say 24 to 29, was it. And the only way you see that is by how it holds higher. And for me, I remember I got very excited, when they had the 800 million shares, were going to get locked up. Everyone thought it was going to get crushed, and it reversed and had a quick move to 24. And then when it held higher in that area, that was an A-play setup for me. So if you look at the chart of Facebook, you will see that was right around here. This is when they were supposed to have the 800 million shares. It was supposed to get crushed. You know what? It didn't. Powerful move right back to the prior resistance. And then from here, this is when I got excited that this could be a good play setup. So this is when you got involved in the A setup. And then you had a really nice move all the way up to this day, which was 12.3. Nice little reversal. Good day to maybe get out of some tears or maybe get flat. I actually tried to get short. But look what happened. We held higher. There was no real selling pressure there. So if you look here, you now have another nice little bull type flag. So, yesterday I said, you know what? I'm going to get back in Facebook. Why not? It looks like it's holding up. This was a great spot. You have a nice bull flag, which is continuation. So in order for it to continue, it has to get above 28.17, and then I think the real level is 28.88. If you go back to the chart and you take a closer look, the next area of resistance that will come into play comes in right around this 30. So I do think there's a good chance this thing gets back to 30-ish, and I think they have another lockup coming up in the next week, so we'll see how it handles that. So I'm trying to stay with the trade, not as much size as I had in the lower levels A setup, but I'd say this is a B plus setup.
Now, what about Deere, a stock that has been trading in a consolidation range for almost 2 months? Any potential setup here?
Yeah, this one is more of I hate to say a leader, but it's showing leadership qualities. Investors that stuck with Deere versus Caterpillar didn't get as battered and bruised, and at this particular point, it looks somewhat strong. You take a look at the chart here of Deere, you will see where it is versus some of its peers, so to speak. And right now, it's going sideways. You have a nice downtrend that is starting to poke its head above. Did some nice consolidation over the course of the past 3 months. It's above the moving averages. So I think investors could stay with this. I think traders might have been getting long it above this 85.94. Your next spot is the highs of this flag. If you take more of a macro look at it, you will see that it's looking better. It's looking definitely better than it was. Here's where it cleared this trend line, held higher. and then now you have another trend line. So if it clears that, this is your macro resistance around 90. And just to quickly throw Caterpillar in there because it's acting a little bit better and people love, Caterpillar to know what's going on here. This is when, your high, lower high, lower high. It broke this and now it's starting to do some consolidation down here. There's definitely news out there that China is looking better. So I think it's a lower level trade. I think we spoke about it around here. You could see it move to the 200-day, and then we have to see how it acts around the 200-day. So this is a lower quality, more of like a B minus, C plus setup, but it could continue because some of these stocks have been battered and bruised because of the way the fiscal cliff is being worked. They're getting a better bounce, and the stronger stocks that people might be selling to take profits in so they don't give all their money to Uncle Sam.
Right, and Salesforce.com has been a tricky stock. This one has been pretty hard to trade, but it's building a base above its 8-day. So at what levels could we see a breakout?
I think it's getting close. I tried this a week or so ago, and like you said, it's tricky because it's expensive, it's thin, so if you get too much, you can get hurt if it's not ready. So at this point, it looks like it's getting ready. And the problem is we don't have momentum. There are not a lot of stocks making 52-week highs, and this one has that high valuation, but it's right there. So I would just say do a little less and see if it could break out. You go to the chart, Salesforce, and look what I'm talking about. So this was the move, went all the way back to the highs. This is where it had a little resistance, wasn't ready, pulled back, held higher. Here's your low, here's a higher low, held at 200. Then look at this quick move right back to the highs. Okay, I think you got earnings out of the way, and the earnings weren't even that great, but it held in there. So at this point, you have a high level flag, lots of naysayers in the stock, a lot of people short it. I would say if it trades and closes above this 160, you're going to see some momentum come to this if the market lets momentum happen. So this is on my radar. I'm not long it yet, but if it starts to go with some volume, I'll go after there as a cash flow trade.
And Akamai Technologies, AKAM, we're seeing some digestion here after the stock's gap up on Thursday. It is facing some resistance at the 39.40 level, so will it have enough fuel to break through it?
Well, typically, if you have a gap up and it holds, that's what gives it fuel because there's shorts trapped. There are people that wanted lower prices that didn't get it. So that's why I love this type of setup. And if you look at ACAM now, something that I haven't traded in a while, here it is. Here's your, above the 200-day, above this trend line, gapped up right into resistance, not filling the gap. If you take a closer look here so you can see, a little bit closer, here you go. Yeah, the gap up. And then, in this gap up, and it was like a gap and go, it's actually held the top half of this wide range bar. So it didn't even come back in to test this gap. So that's showing me some pent up momentum, some trap shorts. So here's your next level. If this were to start getting above, what is this? This is about almost 39.50 to 40. You could see more movement to the upside. In ACAM, this is in the game. This should be on your radar.
And Garmin also gapped up on Thursday, broke above its 200-day, where the stock is now building a base. Do you think we'll see another move higher soon, or do the other key moving averages need to catch up first?
You never know how many days it's going to set up above the gap. You just want to see it hold it. That's why you put it on the radar and maybe have a feeler, so you're really watching it. So when it goes, you're there, you're not late. And I do have a Garmin watch. It's unbelievable. I can go run for 2 hours. It'll tell me my elevation, my speed. It's more than the Garmin of older days. But anyway, you look at the chart here, and it looks pretty good. Here's a gap up. So you have 3 days holding above it after a move from the lows. It's also right in front of a pretty big resistance. So at this point, you do have pent-up momentum, same type of strategy. You could be a buyer versus the gap. So you could be a buyer versus 41.30. And then if it were to start taking out this flag type pattern, get involved. And then if it starts clearing this 43, you have some more upside here. So I do think that this is a lower level trade, which a lot of these lower level trades are working. Although we love 52-week high week trades, where it breaks out and makes new highs and blah, blah, blah. But at this particular point, I think it's on the radar, it's on my radar, and you could see higher prices there.
Coming up, we're going to go on the other side of the coin and take a look at stocks that can have more downside. But first, quick commercial break. We'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're taking a look at some stocks that can have more downside in the near term. Amazon had a 2% loss yesterday. Is more downside in store here?
I think just for a trade, it's worth a look, especially since the futures are opening up and it's opening up after closing on its lows. So I think this is more of just an active trade. You know, if you're an investor in Amazon, you're doing well. It's near all-time highs, and you know there's a lot to like there. Even though their PE is high and their earnings, they haven't had a powerful report in a while. But you know the street keeps giving it discounts. But if you look at the chart, you know, because everyone always gets confused with the fundamentals here. This was your descending channel. Here's where it gapped up and broke it to the upside. Really nice ride. This is when it started to falter a little bit. I think in yesterday's morning call, I talked about this small ascending channel, and ascending channels typically break to the downside. So this one day was more powerful than the last 5. So it's opening up a little bit. So I know short-term traders will probably look to fade a stock that was weak the prior day because of a gap up. So, you know, maybe look to short a little bit on the open. You know, if it stays below, I would say half of this bar. So if it, what's this? This is around 251. You know, if it stays below 250, 251, I think there's a chance that it could then go through yesterday's low of 247.30, then ultimately give you a move down to 244. But shorting Amazon is tricky. It's not for someone who doesn't trade often. This is more for the active professional trader. So maybe you short a little bit of the strength with a stop, then if it starts working, you add a little bit here, and then maybe you make your cash flow down to this moving average catching up because it did have a big move, so a small retracement makes a little bit of sense.
All right, good tips there. And Google was rejected by its 50-day last Monday and has had trouble holding on to its recent gain ever since. So what level does it need to hold to avoid more downside?
You know, off the top of my head, I think it's like 680. Like a week and a half ago or 2 weeks ago, it went back on my radar for a nice setup. And that's what I'm just trying to do. I'm just trying to take setups. You know, in this market as a trader going into the end of the year, you want to take setups, you want to add to your P&L, you want to add to your year, you know, but you don't want to do anything to jeopardize it. So at this point with Google, it still has so much to prove. Here's when it came out with the earnings in this wide range bar. Boom to the downside, engulfing this entire last leg of what was a really nice run to the high here of 774, meeting a lot of our objectives we talked about a year ago. And then what happened? You know, it consolidated, went sideways, small little red dog reversal right here, you know, back to the trend line, and then it was a nice A-plus trade right around here. You know, and then it gave you a move back to the 50-day, nice spot to take some off. And then since then, it's been going sideways and closed near the lows of this little, you know, support area. So at this particular point, I would say it's not a blaring short, and it might even be a do nothing and potentially just need a little bit of time to flag again before it continues. But at this point, if it were to break below 680, 682, you know, you could see, you know, a little bit of downside. So just take a little bit, you know, care there. You know, I'm not making a macro long-term call on Google to the downside, but overall, you know, damage, a little bit of a bounce. Didn't take back more than half, which is, you know, makes it seem like it needs more time. It's still in control to the downside, so watch this level right there.
And we've seen a lot of weakness in Toll Brothers as of late. It's lost the support of most of its key moving averages. What are your thoughts here?
I just, you know, whenever you come out with earnings and you're a strong stock, a strong group, and they sell it off, it's always a time to take a little bit of profits. So this group hasn't been acting great, just one of those divergences where you have the market inching higher and the XHB, which has been one of the best acting groups, usually making highs with the market acting well, and this time it's not happening. Part of the reason is you look at Toll Brothers right here, you will see, now this was the earnings, right? Boom, opened up, you had a tight pattern here, it could have gapped up and went and tested these highs, it didn't. They sold it down, and then you had some follow-through selling. So at this point, you know, I'd watch it for the group. It's probably up a little bit with the futures, but if it starts to break below 30.20, it better hold the 200-day here. Otherwise, there will be definitely a lot of clamoring about the home building stocks that at this point, you know, have a mid-level, or, you know, like if this is the channel here, okay, it's now hanging out in, you know, almost the mid area, but a little bit below it. So below this area of 25.42, you could then see a move back to big support. So, you know, just watch that for future action.
And Nike still trading below the 200-day. It has seen some support from the 8-day, but the stock did show some weakness yesterday with a small loss. Is more downside in store with this stock today?
Everyone's been trying to buy the dip in Nike, and it's been a weak stock this year, and it's coming into big resistance. So it's something you want to watch. You can't just buy a stock because it's Nike. A lot of people have done that in the past and have gotten hurt. You know, so if you look at the actual chart pattern, you will see, you know, you go a little further back here, and you know, it's been a weak stock. You know, ever since this breakout failure here, okay, it did nothing but like high, lower high, broke, you know, big support right there, and then retested, and then went all the way down. You know, and then at this area, it did fill the gap, started acting better, but was stopped at the 200-day, came back in. I will say, it has held higher. Okay, so it's a small incremental positive, but then again, it's having a lot of trouble right here. And then yesterday, with the market somewhat strong, it gave you a little bit of an outside day there, micro one. So I would say if you're not committed to this, this would be an area that if it starts breaking below the 97-ish, you could see at least a move short term to retest these moving averages. And then if it finally does get above this with some type of authority, then potentially gets in motion. So watch this area right here to see whether or not there's more downside or just more time needed.
And Coors has been struggling to find buyers as of late, but on the other side of the coin, Goldman just added it to its conviction buy list. So does this tell us that it actually could be a potential setup?
Yes, and it goes to show you that sometimes stocks just aren't ready yet, and a lot of traders get into the habit of over trading. And this has been a strong stock. This has been rewarding investors since the IPO and thereafter. It's just, there's no momentum in this tape right now. So why would a stock that's been a new issue, that's performed and up a lot since then, just break out? So at this point, you have to watch it. And here you go. This is when it tried to break out and just couldn't. They also had, I think, a secondary around there. Came back down to retest the gap, but it held it. So this was pretty constructive. And then came back to prior resistance, and then got rejected by it, lost a moving average right here. I think it's up right around here now. So I think step by step, it's got to get above and stay above this 52.40, and then it'll be back on the trader's radar if it can get above this 54, for then be in motion for 2013. But what you don't want to see is a convicted buy list upgrade by Goldman open up and close in the lows. Then you'll know there's definitely more weakness to come there.
Molycorp getting some attention yesterday, finishing the day with almost a 20% gain. Time for some quick hits here. What do you think of this play today?
Well, I think when we were doing the Stock Twitch show that Thursday, someone said, look at the tight setup in Molycorp. I'm like, oh my goodness, I can't believe I got to look at this. And the reason why people love it is because when it moves, this is a sexy lower level trade, and it's been battered and bruised. You go to the chart here of MCP, you will see that, here's two trend lines. You had one trend line coming all the way down that it broke. Then you had this little inside range. And I remember I almost laughed when she asked me about it. Then I looked at it, I'm like, last time I had a tight setup, this happened. Last time it did, it failed. But here it might go again, and it was up big on big volume yesterday. So you go take a look at the volume, and this shows me that it could continue. That's big volume. So your next level here is 1133, and then I guess if it really wants to continue, like some of these highly shorted lower level tier stocks that have been working out, like a GMCR lately or an FSLR lately, this is something that I know guys are going to try and continue to stay with if it shows that it could have a commitment. And
your thoughts on Apple, which all eyes are on, and it's been in a bit of a roller coaster.
Roller coaster at great adventure, exactly. From 700 to 505, from 505 back to 594, back down to 518. You get down to this chart here, and you will see this was that topping pattern, the left shoulder, head, right shoulder, boom, fast forward to the low, nice tradable low, back up to resistance, came back very fast. But you have like a little inside range here for a quick hit. I would say constructive. If it can get above and stay above this 538.51, it might get it away from this lower level trend, which would keep it in harm's way if it stayed here. And then your next level here is 555.20. So Apple, I think, does have a lot to prove. But if it can get above this level and close above 555, I do think people will start getting away from it and sentiment will change. But right now, sentiment is just a little worried about the stock. Came down very fast. A lot of gyrations. When you have a lot of gyrations, that seems institutions are trying to get out. Maybe it was some of those hedge funds liquidating. Maybe it was forced selling. So at this point, Apple just has a lot to prove.
All right, and banks have been acting well, but Goldman have been lagging the group. The stock woke up just a little bit yesterday with a small reversal. What do you think of it here?
I think last week the A play was Bank of America. The B play was J.P. Morgan, and everyone was like, "Why isn't Goldman Sachs joining the bank parade or whatnot?" So yesterday, I looked at Goldman and I was like, "Oh, look, a little outside day, small, not blaring." And what I also liked is you have a nice little tight pattern here, so I nibbled on a little bit. Okay, so at this particular point, for it to get going, I think it needs to clear like 1850, with some type of authority. But remember here, this was a great little trade when it cleared. And you know why Goldman's exciting? Because once it has a wide range bar, it sets it in motion, it goes. You pull back, went again. So this hasn't been the darling right now, but I do think that above 118, 118.5 with some volume, it could be good for the banks. If you look at Bank of America, it's been acting very well. This was a great A+ trade last week. holding higher. This thing starts to get above 1070-ish, and you'll see people saying, banks are strong, and people then, when they see the banks are strong, they look for something else, and maybe Goldman with that tight pattern could start to resolve it to the upside.
And Lulu keeps retesting that resistance level of 73.70. Is this stock on your radar for a breakout move?
Just like its gear that's nice and tight, this chart pattern is somewhat nice and tight, and let's get it a little looser because it has to start going for traders to not lose interest here. And if you look at the chart, here was that move on earnings. I remember it was down 6 and then closed up well. So hanging out here for a little bit makes a little sense. Okay, so I don't think traders are so frustrated yet because look how it is holding higher in this range. So I would say if it could start getting above this is actually on my radar. If it can get above 73, 75 or 74-ish, it could have a really quick move back to the highs of 80. And then if you take a look more at the macro chart of Lulu, you will see, from there, you're back to the highs. And then that means highs usually, create new highs. So at this point, it's in the game. Investors have had a nice ride. You look at the weekly chart of Lulu, from its IPO, lots of nice gains here. Wedging again. The question is, can this wedge lead to another move? Each time it's done that, it's continued. You have to be a little worried as these type of things run their course, but nice descending channel to the upside. Big pull-in, lower level type of pivot to the upside, holding higher. Now the question is, can it break above this area for another move? And we shall see. So as of right now, your level's there.
All right, so what is your focus heading into trading today?
My focus is to see if the banks could continue to have strength, if this gap up or up 3-4 handles in the futures holds, if Apple, that is up $4.50 pre-market, can it hold the gap? That's one thing Apple hasn't done. Every time it gaps up, people use it as a way to sell stock a little bit higher, goes negative. So for the first time, I think it would be healthy for tech if Apple can gap up, sellers try and sell it down, and they don't, and then it has a gap and go, heads higher and goes over those 2 points that I showed you. That'll help the overall, I would say, friskiness of the market, because right now the market just feels lethargic and things are working, but there's not a lot of momentum, and traders love momentum, but we got to take what we can get.
All right, sounds good. Happy trading, everyone, and have a great day.